Excellent. Good evening, guys. So I've got a jam-packed session for us tonight. What I'm going to do, like normal, I'm going to do a little bit of sort of mindset, psychology, moving on to some sort of basic stuff, then looking through the GCad trade from today, which is the trade of the day, Porker. So we'll go through the whole strategy and how that would have worked. Then I'm going to do a little bit for the advanced people. So hopefully I'll be catering for all. But as always, just jump on the chat, unmute yourself if you've got any questions, and we'll go through it over the next hour. So Ryan's in. Nice one. All right. So I always start off with the psychology, and it is absolutely on purpose, because the difference between like an average trader who, and let's be honest, the average trader out there loses. Most people lose when they trade. Okay, so average is not good. And what's the difference between average and us? Well, you know, the main difference is we've got the right education, always helps. We've got a really good team ethic, so we've got support, and we've got some tools that no other companies have, like the harmonic scanner. We do have an upper hand and an unfair advantage. But the biggest thing that we need to control in these charts is us. So I talk about it all the time, about mindset and journaling and all this stuff. I'm just going to go over a few bits and pieces which I've done before. So for any of you that have heard it before, it's a really good reminder. For those of you that haven't heard it before, make sure you're jotting this down, all right? All right, so what we're trying to do here is we're trying to master a skill. Yeah, the skill we're trying to master is, one, what trading is, but also using scanner source to give us that edge, right, to make us profitable. So there's 4 steps to mastering a skill, and it's always good to have these in mind, because I'm going to tie this into some pitfalls that people get into. So step 1 is when you're unconsciously incompetent. What does that mean for trading? That's like not knowing that the average Joe can trade. All right, so that's where, like, oh, I didn't know you could do that. So you didn't know you didn't know. Yeah, you don't know how to trade, and you never know you could do it. So obviously all of you now are past that phase because you are in the team, and you quickly come on to phase 2. Pay skills, which is where you are consciously incompetent. So now you know that there's a trading academy, you know there's funded accounts, you know there's strategies and tools and all this cool stuff to learn how to trade. So you know now that you don't know how to trade. All right, so you know you've got this journey ahead of you to learn. Sorry, my phone's just gone off. Hold on one second. Okay. All right, so we quickly come to the realization that we've got a lot to learn. Yeah, there's lots of videos, there's lots of stuff to get through. I will tie this all in, guys, so bear with me while I go through this. Step 3 is where you start going through your videos, you start noticing trend lines, you start understanding support, resistance, candlesticks. You know, you're starting to become more in tune with trading, so you're becoming consciously confident. So when you really put the effort in, you get it, and you'll be going through the strategy, you'll be putting on trades. You know, you're starting to feel more comfortable, more confident. Okay, but this is not where we end up, right? We don't want to stay consciously competent. Right? We want to get to the final stage, which is where the magic happens, which is step 4, where we are unconsciously competent. So this means that you know, without even really trying, you know when a trade's about to trigger. You've just seen it so many times that you can do it on autopilot. It's like tying your shoelaces. You know, you can have a conversation with someone whilst you tie your shoes, but when you first learned, you didn't have a clue how to tie your shoes. You know, and now you can go about everything whilst you're doing it. Same with driving, like all those sorts of skills. If you think about it, all the skills you've learned in your life so far, you're normally at a stage now where you can do it without thinking, autopilot. Same with trading. People though, let's reel this back. People get stuck in like step 3 and don't make it to step 4. And this is where it, like being distracted, looking at a different strategy, you know, not asking for help. That's where people get to a point where they're, you know, they're trying, but because they're not consistent. You know, if you think about like what you can offer yourself in your trading journey, is that you have to do the same thing over and over again. It's the only thing you've got to commit to, being consistent. And that way we then know if what you're doing is good. Yeah, if you're trying different strategies or, you know, bits and pieces, you can end up being pretty good at some stuff, but you'll never get that freedom, because you shouldn't be on the charts from there. You know, it should be a dip in, boom, we've got the scanner, boom, 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 right, as it triggered, yeah, right, we're in. Yeah, that's kind of where, that's like the mission to that stage. We've got it all there, we're working towards that. The way you get from 3 to 4 is by doing that consistency piece, by doing the right things over and over and over again. Okay, there is another way, but it's not the way we're going. The other way is to copy someone that's an expert. Well, you can log in with Manny. He doesn't quite use the scanner as I do, and I don't do signals. That's not, you know, you want to be self-sustaining traders. You don't want to rely on me. You want to be able to do it yourself. So that's a decision I've made, not to not make it easy for you, but you know, if I'm not around, you should be able to trade. Do you know what I mean? Cool. The next thing, this is something we've been through before, and it all ties in really with this. But we've got something very, very important that we need to keep in mind at all times. Mindset phases. All right? The mindset phases. Now, these are super, super duper important. So, look, if we tie these in with these 4 steps, when you join the academy, it's all real. You've got all these logins, you've got scanners, you've got chats, you've got groups. You know, we're all meeting up on a Tuesday. You know, it's all quite exciting. And that's where you start to learn. Yeah, you start to go through it, and you're excited. Now, if any of you are like me, you get to some of the videos and the information gets pretty full on, and you think like, oh my goodness me, I hope I can make sense of this in the long run. Like, I really wish that I'll be able to trade. You know, that's my goal. I want to be a trader. So you start to doubt yourself. All right, this section here comes around in my life fairly often. It's the killer of dreams. We all know that. Self-doubt is a killer of dreams. And you just got to keep going. You just got to keep trusting the process, watching the videos, making notes, going over the videos, applying the skill, and you treading water. Because then what happens is you get to that point where you have a moment where you go, you have like an aha moment, real cheesy, I know, but you kind of go, forget it. I saw that trigger, I saw the structure, I saw the support and resistance, saw the divergence, forget it. But I get it, I can trade. And you have that self-belief. That's where things start to really change. And your goals, you start dreaming of bigger and better things, especially with these funded accounts. And then when you get to unconsciously competent and you're just knocking out trade after trade, bang, bang. Like there's been some interesting stuff on the scanner today, which I'm going to cover as well, where our strategy has protected us from making mistakes. And I'll show you in a bit. Once you're in this unconsciously competent, you know, you've got faith in your ability. You're confident. You're literally able to trade. You've got what you want out of trading. You've got a funded account, and hey presto, all right, you've done it. Now the reason I bring these up is it's really, really, really important just to acknowledge them, understand it. You're not trying to avoid it because we're just emotive creatures, being human, and you might flitter around in these phases. So again, I'll explain my journey. So before I took my demo test, I was like, I can definitely trade. I know how to trade. I've been doing it on the demo for a couple of weeks, couple of months. Like, I know I can grow, I can. I had faith in my ability. I paid for my test. I was very excited. Yeah, back to phase one. I lost a couple of times, so I started to doubt myself. Then won a couple of times, I was back to self-belief. And then it took me a while to get faith back in my life in these demo tests. Right? It's the same when I got the actual funded account. Remember I talked to you about this the other week? You know, I was excited, like, ooh, a bit nervous too. I had these like crazy thoughts. Do you remember I talked about that? Like, I'm not trying to get you to like ignore these things, just acknowledge them, because without having that sort of knowledge of what your sort of temperament, what your personality is like, you can end up in this self-doubt cycle for a long, long time. Long, long time. So what that can affect your mastering of this skill is that you can go off and get another strategy, and then you're back to being, you know, at the top of this list again, and you're just wasting time. You're never going to get there. But every single strategy works, every single one. That's why they're strategies. All right, it's just you've got to trust the process. Between being consciously competent and doing it on autopilot, you just have to do the same things over and over and over and over again. So, you know, on purpose, go through the strategy with you, and it's the same every time. That's not by accident. That is by pure design. Yeah, it's just training your eye, going over and over and over it. So if you find yourself sort of, you know, pulling away from a strategy to kind of do something different, I just want you to acknowledge this conversation, because, you know, the aim is to get funded. All right. And, you know, we need to practice the same way, the same time of day, have a schedule, and talking to a lot of you about that. Like, trade the same times of day, so that the market does the same thing, does different thing at different times. So you're just condensing all you're doing and just repeat over and over and over again to get stronger. Yeah, that's it from Mindset today. A quick blast on mastering this skill, because this skill can change your life. It's changing mine, and it can change yours too. But I want to just explain to you, you just got to keep going. You've got to keep practicing, and just have faith in it that it's going to work. All right. When I show you GCad later, whew, what a beast! What a belter! Absolute belter. Right. The next thing I'm going to do is, well, chuck some stuff in the chat, guys. If any of that didn't make sense, you got any questions, come off mute, do the same sort of stuff. Let me know, yeah, if that didn't land. All right. What I'm going to talk about next, right, is more sort of the basics of support and resistance. Trend lines. Okay, it's one of the fundamental parts of our strategy, and it's the only bit, if you remember, that I'd say is subjective. That means that we can see it differently. I might see something that you don't, vice versa. So, and that's cool. All right, you've got to trust your instincts, but you need to document stuff. That's why I talked about the journal. So if you thought it was a downtrend or you weren't sure, draw it, don't enter. Draw it, see what happens. But this is technically what we're looking for, right? We're looking for commonality in the market. So what that means is this will now be considered as a resistance, like a ceiling. This black bar is like the price, yeah? So it's come up, reversed, come down, reversed, come up, and it rejects down. Do this, back down, boom. And again, that's now the floor. You could go back up to the ceiling. So all support and resistance is, I'll do this on a live chart as well. All support and resistance is where the market has come to before and reversed. Yeah, a common area in the market where price has turned around. Okay. Now, when you have that with trend, some of you that can see what I'm drawing, you know, you'll have this as your trend line, something like that. All these things are doing all these structure points, remember, it is one of the first things we look for on the scanner is structure. What we're looking for is we're just getting clues. It's just another layer. Like, you don't want to enter a trade in the middle of the move, because, you know, if you're entering a trade here for a sell, where are you going to put your stop loss? So if you're entering in the middle of the trade, you know, the risk reward on that, it's not even 1-to-1 to clear the high. So like we never want to be entering at the middle of the move. We want to be selling when we're high, buying when we're low. So these structure points just give us that clue. Are we getting in at the right time? And most of the time on the scanner, you'll kind of see that it's a structure. We'll go over that as well. But that is the basics of SRT. So support, resistance, ceilings, floors, trend lines are just, you know, connecting swing points to see what direction the market is going in. Ready? If we look at this on a live market, recently, I don't trade this very often. I'm just going to jump down to the 15-minute, see what's what. Okay, so you can see in here, you've got, like, you see this bit where it's come twice and then it's finally broken. Got like a little bit of resistance there. Body to the wick. Then it's come through, broken, coming back down to retest. You have floors here. Can you see that level? Like, if this is sort of new to you, I would spend time going through charts and just drawing these areas where you see the price hit, like bounce, 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 bounce. Yeah, it's just common areas in the market where price comes to and changes direction. So there's another little zone here. Yeah, get the picture. So we don't want to be selling here. Yeah, if you were selling here in the middle, you know, you're risking, you know, 1 to make 0.6. Yeah, it's not a very good investment. I want you to think all of this, all of these layers are to help you grow your account and also lose more than you win and still be profitable. Like, do you know any other industry where you could be a loser and walk away with money? That's what we've got at our fingertips, all right? That is what we've got. So support and resistance, and we've got trends like this. So arguably this currency on the 15-minute chart, you know, you're looking at it being in a bullish market. Yeah, from there to there, starts low and it's going high, it moves its way up, it's stepping up, isn't it? See that? For those of you that are a bit more advanced, a bit more used to this stuff, you've got like little internal uptrends here. You know, they're it's like the sub-trend breaks. You've got like support levels here. All right, so just get used to drawing. Draw, draw, draw. Draw, draw, draw. Is everyone all right with SRT levels? Chloe, does that make sense? I know most of you are pretty good with that stuff. So I'm going to come to the scanner next. Yeah, Chloe's good. Nice one. Okay. Right, so I'm going to do the GCad walkthrough. Ian, I believe you called this out in our demo test group. A good man, good spot. I was in a meeting this morning at 8, so I missed it, annoyingly. No, not annoyingly. But let's go through it. So I don't know if anyone else's scanner keeps doing this, but every time I zoom out, it moves drawings. So I'll just look for the trend first. Yeah? So we're looking at GBP CAD, 1 hour, hot forex. Always, absolutely always. You can see that here on the 24th of Feb, it's been trending down, yeah? The low's been broken, making new lower highs, lower low, lower high, lower low, equal high, kind of consolidation, and now we're back. This is where it was called. All right, so I'm happy that we're with trend. Right, right. Next thing we do is our entry at a structure point. All right, so that support and resistance we've just been talking about. Well, is this price, the D point is where it's saying to enter, is this a common area in the market? This is a sharp pattern. So the sharp pattern's 2 entries. You see the 2 green lines? So actually that whole zone based on fib levels of where price had been before. So I'm happy that that is, especially here, at. You all agree? We all good with that? So on my checklist, I'm ticking that off. Bang. Right, next one. Is there any divergence? Right, on this one, there's absolutely shed loads. So we've got X on the AO, and look, it's that line is going down, that line is level. Yeah, you see that? X and D is pretty much an equal high. It's on the support level, but on the AO, it's dramatically different. Dramatically different. So we have divergence. Divergence means that price is being manipulated into an area without the required amount of volume. So that means there's not enough orders to actually get it there, which means it's been manipulated, which tends to mean it's going to reverse. So we've got divergence, tick. What are our fib levels? Well, from X to D, the fib level there is the 96.5. So it's nearly an equal high, it's close. B to D, it's well overextended. So it's the 1.74, so it's 174% of this move here. So when something overextends, it's normally likely to reverse. What I also look for is I look for the last swing high, bit of a Brucey bonus. And then I go down to the low. So this is like the trading range. Yeah, you see that I marked it off this bit. So this is the high. This is the low. So high to low. And look where this has come to. The 618. Fire your boss. Look at it. I can't make that up. Bingo, bango, straight on the 618. Wallop, see you later. So we've got structure saying, yeah, it's been here before and it went down. Yeah, been here before, went down. We've got trend saying it's bearish. We've got fibs now telling us that it's overextended in this pattern and it's an equal high. There's divergence, should reverse, and it's at an overall 618. Ryan gets the Brucey bonus. So I'm not going to zoom out because it was remove my drawings. I'll trust you on that one. So from the top of the trend to the pullback, it's a 38.2. So there's like multiple reasons why this was going to reverse. So well done, Ian, for spotting it. So tick, fib level, yep. DC channel, has that been hit at entry? DC channel there, the D, the wick of that candle, and the red line that's coming up here, bang, they all meet at one lovely point, tick. Right, what I do is now I go from here to trading view. As you've seen, I have a wonderful knack of all my lost the drawings. So I've gone to the liberty of putting this on the chart. So it's roughly where the scanner pattern is. Okay, these are the targets, TP1, TP2, TP3. The 127 extension is down here. So we already know by the time I get to trading view, all we're looking to do is enter. There's no more analysis. We do nothing. We're just looking for the candle. Looking for confirmation candle, AO stopped, We're looking for entry. That's it. We've done the assessment. We're now just looking to take advantage of the trade. All right, so entry number one. Flat top. This one is not our entry. DMI, everything else, and the stotch, the blues above. This is not our entry. This one is not our entry. Stotch is looking better, getting ready. DMI not there. This one, not our entry. Stotch looking better. DMI still not there. I think that's 4 candles. So that's an hour. Bang, 7:45. Probably just woke my son up. 7:45. Bingo, bango. We get entry. Turn that green. That's our entry candle zone. The 4 is crossed up here and it's below the 4, so we're good. Entry candle zone, we are taking the trade. Candle closes, that's it, we're there. If you're playing safe, stop loss above the high. TP3 is the target. All right. That's a 1 to 3.56. Lovely. Now you could play with the zone with the stop loss, but I would do so when you get some journaling in and see how many times it reverses and how far it goes and does it go over structure. Until you've got the level of detail you need to be confident, put it above the deep one. Yes, Chloe, I can do. So this one here, this candle here, so at 7:45, when that closed, 7:45, the candle closes, moves on to this candle. On this particular candle, we had a flat top. I know it's getting a bit busy on the screen, but this had a flat top. Yeah, didn't have a wick on the top. Red is closed. Well, the cut through of the 4 is on the previous candle. It looks better there, but it's below the 4 McGinley, and we follow the line down. We've got red on the AO, red on the stop on top, red above the blue on the DMI, and importantly, the black line above the 40. So when all of that's in a line, boom, that's our entry. So as soon as that candle closes, cool. As soon as that candle closes, we enter. Bingo. We enter. All right, work out your risk, 32 pips. Do your lot size. We hit sell. Bang. We put in the stop loss. We put in the take profit. And we're off. Yeah, we are off. I'm going to move this over because the second entry happened quite quick. So that's entry 1. Yeah. Entry number 2 came 2 candles later. You see the 4 and the 20 cross? So the 4 is the blue line, black line's the 20. It crosses, closes. So we would have got in at the end of this candle. Around here. Now, for my second entry, I go just outside the entry candle zone for the second entry. All right, so this one might give us a better risk reward. I aim for TP3 again. That's a 1 to 4.7. Okay, so if you've used 1% risk, 2% risk in play, 2% risk for a potential 8, nearly 9%, over 9%. You only need 10%, pass your test. All right, this is why this is powerful. Really good risk reward. That's why all we do is enter on the 15, nothing else. Great. Right, we're in that one too. So we're in 1 and 2. Move this one this way. Third entry happens fairly quickly too. So if you think about why the trade is so lovely, is there was basically zero drawdown. It just went trigger, trigger, trigger. We had all the commonality of it being a reversal area because of the fibs, the structure, the trend, multi-fibs, actually, the divergence, all of that combined, boom, it hits one particular point and we're dropping. And that's what it should be like. If you've got it right, it should do that. Third entry, the cross of the 4 and the red line, which is the 50. Cross, wait for that candle to close, and we enter on the close of that candle. All right, this one I would put sort of midway up the entry candle zone. If there was like, if it did consolidate, I would make sure it's above any consolidation in the zone. And then the third entry, this is your swing trade, really. This is going for the extension of the 127. Okay, so this one's a 1 to 3.7. 3.8. So you've got 3.6, you've got 10, probably got 11, nearly 12% worth of potential gain in one trade. So that's why I've been saying like less is more. You only need a couple of trades. Literally, you need a couple of trades to get funded. You need one a week. Just imagine all the freedom you'll get. All right, this is powerful, powerful, powerful. Now, I've got something more for you. The guys that have been trading for longer, I've got some more, like more advanced stuff, which I'm going to do in a second. But this was beautiful. Literally triggers, bing, bing, bing. We're in. We're in 3 times. We're catching the pips. We're in profit. Everyone's happy. So once I've entered on the 3rd entry, I'm back to the hour to watch it. I'm already in 3 times. I'm not interested in trading anymore. I mean, like entry. I'm just watching it. What I want to see it trigger on the 1 hour. That'll just give me confidence that I'm in the right trade. Then I try my best to leave it and try not to watch it and babysit. Can be difficult, definitely. And that's it. Bang! You're in 3 times. You're at break even on the 3rd entry and in good profit on the first 2. So look, this went straight down, hit TP2. Wow. Instantly, boom, boom. TP2 is the 618. Normally where you get a pullback. So that's all very nice to see. Lovely. All very nice. All right. Those of you that are a bit more advanced, let me delete these. I want you to really, really focus up here. All right. I'm going to try and make this a bit cleaner. Right. I want to explain to you like market movement in a way that will hopefully give you confidence when you're in a trade. So you'll just let it go. Just let it run. Okay. Now, one thing I noticed when I was drawing up this pattern, there was the start of an uptrend. Yeah, I'm very, very confident this is a pullback. The overall trend on the hour, like when we zoomed out, was very bearish. But I was conscious that there was kind of some structure here. So I always had in mind when I was analyzing this, you know, the price needs to break that trend line. You know, if it reacts in a bullish way to this trend, then you know that's something we might want to consider if we're going to pull the trade. But look, you can see that it just breaks it, hits TP2. And what do we know about trends and structure? Well, normally you'll see a break and a retest. What a break and retest means that the candles have closed below this black upward line. Yeah, the close of the red candles at the bottom. And now it's starting to pull back, yeah, to the trend line. Can you see though that the body of the candles never closed above it? So that's what I'd be looking for. Is the close of the candle still in the direction of your trend, of your trade? So even though you got like this spookiness here, and that might have been enough to make traders pull out, right? You're very rarely going to get a trade that just goes boom, like without any pullback, All right, so I'm going to explain the market movement so you can stay in longer. So we know that, yeah, trend, they get broken, it normally breaks and then test the outside of the trend. We know with structure, it normally breaks and then tests the outside of the structure, like a price reversal zone. Now, I want you to look at this very, very, very closely. I'm going to change to normal candles. So, when we get the close of a candle, I want you to think of these McGinleys as well as like floating support and resistance. That is technically what they are. They're an average of price, last 4, 20, and 50 candles. So it's like a floating support and resistance. When this candle closes below the 4 on the hour, you see that immediately, getting a bit advanced, immediately this wick immediately pulled back to the blue line. Bink, then dropped again. Now pulling, it's testing the 20. See, it's like bouncing off the 20. It's trying to pull back to the 4 again. And then it drops heavily and bounces off the 50, closes on the 50, but it's now broken the 20. Yeah, the black line is the 20. You got your second entry. Oh, this is on the hour. Forget that. You then have the very next candle. You're in full-blown momentum. That's why this strategy is ridiculously good. Full-blown momentum. You should be at break-even up here on your first 2. Pulls down, closes below the 50. So in 4 candles, we've had a close below the 4, a pullback to the 4, close below the 20, no pullback to the 20, and a close now below the 50 at the 618, which is the TP2. Hopefully you're all following me. It is very, very likely when that's happened to pull back instantly. It's a 618, first of all, but you've had 2 shifts of momentum, and it now has to go and retest those areas. Right, if I put this trend line back in, I want you to think about that commonality in the market. All right, what is it doing? Is it doing it multiple times? Something like that. Whatever. But can you see that it's broken the trend, carried on, and they're all coming back to retest the 20. It's retesting the 50, retesting the outside of the trend line. Right, when it's not just going to break, and we'd all love it just to keep falling, but you're going to get that fluctuation in price, and that's where your nerve has got to come in. That's where you're unconsciously competent because you've done it so many times. You know it does this. That's where you have faith, self-belief, comes from your journaling to give you confidence. Like you see that all these things we've layered in are absolutely all vital. Vital. So bingo, closes. It retests the outside of the trend. It's done it a few times, and then we get another drop. So when I'm watching this on the hour to see, am I staying in? All right, if I wanted to babysit it, I did this a lot, like a lot more than I do now. I did this a lot when I was getting used to this strategy. It's now, that's closed and the 20 and the 4's crossed. So I'm like on the hour, I'm happy as Larry. I noticed that the candle closes below the 50, but there's no cross of the 4 and 50 yet. So I know normally now that at this stage it's going to pull back because it's bringing the 50 closer to the 4 because we need that to cross. That pullback actually brings our third entry closer. We then get this shift candle, boom, it breaks below the 4 again, breaks below the 50, and look, we then start getting that downward pull on the 4 to 50. Bingo, breaks. It's now closed below the 4 and 50. It's now broke below the 618. It's coming back up to retest. Now overnight. So what do? Do you hold? Do you close? I would be 1000% holding. And why? Right, I'm at break even on 2 and I'm at entry on the 3rd. But the real prize is down there. TP3 and the 127. We have to have faith. The reason I've got faith in this, because, okay, right, it might go back to break even. It could do that. It's trading. Sometimes that happens. But I know that most of the time, if we've got it all correct, this should, remember market structure, this should go and actually take out this low. Yeah, this low is like not even significant. This is the swing low. So if we're in a downtrend, you know, this should come and knock out this low and go and make a lower low. Go make a lower low, and then pull back, and then continue down, make a lower high. It might take a bit of time, but who minds holding a trade when you're in blue? Like, it's all good. It's all good. So when you're practicing, I really want you to practice holding your nerve, holding the trade, documenting how you feel about it. So like, I'm going to bed in a minute, pretty nervous about holding a trade overnight. Wake up in the morning. Yeah, I was unsettled overnight. I was thinking about it lots, but it went on to hit TP3. And the more and more you see of that, the more and more relaxed you'll be when you're then going to bed and you're like, ah, well, you know, I'm at break even on everything. So, you know, if it does turn around, I've not lost. Or, you know, there's times where I'll hold it overnight. I'm not at break even. I've just accepted the risk. You know, you're going to lose in trading. It's fine. It's fine. But if you miss out on 128 pips and 88 pips, when you're in right up here, like you're missing out on most of the move. This is not even the move. This is like not even halfway, well, it's just over halfway, you know, through the move. So by journaling, controlling your emotions, you can make the most out of every trade. Fiona, that's a really good question. I don't consider Elliott waves. No, I don't. I look at my journal normally because I've done this so many times where I'm thinking, you know, is it gonna, if you want me to get real technical, my son coming down. Right, this is the swing low. And when it made this swing low, look at the expanse away. There's loads of gaps in price. So I'm fairly certain this needs to come and trade into, which is on our 127. So all I'm interested in is the overall trend bearish or bullish? There's some other ways to signify that as well, but let's just watching too many Manny videos. Yeah, he will mess with your mind. He will mess with your mind. This is actually, Fiona, this is where like the becoming consciously competent and autopilot really, really comes in, because there's so much information, you can just get lost in the information. Like you don't need to know it. Like what I've shown you is how I trade, and I've got funded using it. So it's just about doing it over and over and over and over and over again until it's just second nature, normal. So, you know, before when I was kind of new to this, as soon as it started pulling back, I'd have freaked out and probably closed it, to be honest. I'd have freaked out and thought it was going to reverse on me, didn't trust it, blah, blah, blah. Over time and through journaling, I realize now that actually that's just the way the market moves. Yeah, these lines like the resistance, it's already broken the 50 and now coming back to retest the 50. All right, the 4 and the 50 crossing is the one where you're going to most likely get a big reaction, because the 50 holds a lot of momentum. It carries the trend. Look, it's been carrying this trend. There's big moves when it crosses. All right, so it's already crossed and we've already had that big push down. This is a retracement. If you want to go crazy with fibs, you can start doing the high to the low. Right, it's at the 786. We know it's a reversal area, fair value gap, whatever you want to know about fibs. It's there. So this could be an area where it now starts to come back down. But who knows? We got the entry, we've done our job, we've entered, and now we just sit on our hands and wait for the pounds to roll in. Okay. Going to break even, you know, definitely something I do. There's times where I think actually it often comes back, wicks my entry and then drops, which is the most frustrating thing in the world. But it hasn't done that enough for me not to move my stop loss. In my journal, it hasn't happened so often that I realized that doing it's a detriment. It saved me more money than lost me. So I'm definitely still an advocate for that. Protect your account at all times. Protect the funded account. You don't want to lose it. All right. But what you guys need to do to get to unconsciously competent, you need to let the trades run. All right. It's Tuesday. We've got the whole week for this to play out. If it was Thursday, then I would treat it differently because we can't hold the trade over the weekend on the FTMO account. But right now, if I got a sick entry up here, I'm holding this. I'm holding it. Okay. I'm going to mark this area of where, actually, I'll just do, how do they, is it call out price label? Right, so this is where price was when we left this, and we'll have a look. That's the price I just clicked on. We'll have a look in the morning and see where it is. Okay. Wicked, 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 wicked. So any of you that caught GCad straight off the bat this morning on a Tuesday after bank holiday, it was set up beautifully, really, really good. Just to recap what we talked about today. Here we go. So we want to master this skill, yeah? We want to be in control. We want to be self-sufficient. A lot of you now are at stage 3, where you know what you're doing. You know the ins and outs, you know the strategy. And now it's just about doing that so many times that it's just auto. Yeah, you're on autopilot. You enter a trade. You don't freak out when it pulls back a little bit because you've done it so often, you know it's going to go to TP3 most of the time. Yeah, that's the mecca. That's where we want to get to. We want to have the funded account working for us, not us working for the funded. All right, but now where you practice, so important to let these things run. Be in control of your mindset. So acknowledge these different areas. Like when I did the demo test, I went back to excitement. Then you'll filter through these all the time. So just be aware of them, acknowledge it. What you'll find is when you start or have like wobbles where you get self-doubt, you know that you're very close to self-belief. You just got to keep going. So you will stay there for less time. All right, that's why it's really helped me, why it's really important. I've done some work on support resistance trend lines. It's all like fundamental for any strategy. And then we've done the GCad walkthrough, the entries, a bit about how it moves after entry, holding your nerve, journaling. What I'll end on. Now, I manage my trade. If I'm going to watch it, I'll manage it on the hour. All right, the only time I would pull this is if it triggers on the hour for a buy. I don't care about a triggering on the 15-minute for a buy, because the analysis we've done for this sell, you've got about 12 indicators that if it starts triggering on the hour for a buy the opposite direction, I'll pull it. Right, there's so much momentum in the hour that I'll pull it. That's if I'm watching it. Okay. Now, what you'll want to see with a buy is you would want the 20 and the 50 like way up here, because you would want it to have room to go and knock it out. That's why I'm pretty confident in this one. This is just a, you know, break and pull back, you know, break and retest. Righty. So we've been through a lot. Mindset, personal development is the difference between the average and the really good, the elite. You being consistent is the difference between you being average or elite. So keep to the plan. Be consistent. You're the only thing that you have control of is what you do. So do the same thing over and over and over. You'll then get to unconsciously competent. You'll be on autopilot. You'll be free. You'll be trading with big sums of money. You'll be happy. All right. I don't know where these hours go. Go so fast. But that is all from me tonight. So I hope you found that beneficial. Just keep practicing. Like I just want to also say that we've got like 20 people in the team. We've got about 13, maybe 14, like really going for funded. And I've got 6 people in their tests. 6 people. But I'm funded. And there's Ian that's passed his stage 1. You've got others that are very close to passing stage 1. And then we've got a couple more that have just embarked on their tests. I'm not naming names. They can if they want to. So we've got the majority of the team already rocking and rolling. So your time will come. Don't compare yourself to others, but trust the process because it works. Alrighty? Righty, I'm going to stop my recording now. So thanks again for coming.